What if the craziest ideas were never crazy at all? What if the world's strangest investments, tulips, rocks, memes, and even invisible money, were actually the keys to fortune? History is full of people who looked insane right before they became rich. They bet on ideas no one believed in. They saw value where everyone else saw nonsense. And when the world finally caught up, they were already gone, richer, freer, and laughing quietly at the madness that followed. Because the truth is, money doesn't just follow reason, it follows belief. Every financial empire, every bubble, every boom, begins with one person who dares to believe that something absurd might just work. From flowers that cost more than houses, to digital coins that started as jokes, the line between genius and madness is thinner than we like to think. In fact, it may not exist at all. So the real question isn't why people invest in crazy things. It's why the rest of us don't, until it's too late. Every era has its madness. Every generation believes it's smarter than the last, more rational, more disciplined, more immune to the delusions of the past. And yet, time after time, the same story repeats. The faces change, the technology evolves, but the pattern, the rhythm of greed, fear, and faith, never disappears. In the 1600s, it was tulips. In the 1700s, land speculation. In the 1800s, railroads. In the 1900s, oil, stocks, and collectibles. And in the 2000s, digital money and memes. We laugh at history's bubbles, but we're always standing inside one of our own. That's because markets aren't powered by logic. They're powered by stories. Money, at its core, is a shared hallucination. It's a collective agreement that something worthless on its own, a coin, a stock, a picture of an ape, suddenly has value because we believe it does. And belief is contagious. When enough people share the same dream, the impossible becomes inevitable. That's why financial history isn't really about money at all. It's about human nature. And the people who understand that truth don't just make investments. They make history. In this journey, we'll travel across centuries, from the manic markets of 17th century Amsterdam to the digital playgrounds of the 21st century. Uncovering how the world's strangest investments turned ordinary dreamers into legends of wealth. Because sometimes, fortune doesn't reward the rational. It rewards the bold, the weird, and the ones who dare to look foolish, right before the world catches on. The Tulip Mania, 1600s. It began with a flower. Not gold, not land, not a company, but a tulip. In 17th century Holland, tulips were more than just plants. They were symbols of beauty, class, and power. The rarest bulbs came from faraway lands, painted in colors and patterns that looked like works of art. And in a society newly drunk on trade, wealth, and global discovery, people began to see tulips not as flowers, but as fortune itself. Amsterdam was booming. Merchants returned from the East Indies with ships full of silk, spices, and dreams. Money was flowing, credit was easy, and optimism filled the air. In that mood, a single bulb could trade hands dozens of times before it even bloomed. Soon, a rare variety like the Semper Augustus sold for more than a luxurious home along the canals. Contracts were written for bulbs that hadn't even been planted yet. Farmers, soldiers, merchants, everyone wanted in. And for a while, the madness worked. Early speculators doubled and tripled their wealth overnight. Stories spread of ordinary citizens who became rich from flowers. People laughed at the absurdity, even as they joined in. But the higher the price climbed, the weaker the belief became. By the winter of 1637, a single missed auction was enough to trigger doubt. When the first buyers refused to show up, the entire illusion shattered overnight. Within days, prices collapsed, fortunes evaporated, and the same crowds that once glorified the trade now mocked it. Yet even in the wreckage, there were winners. Those who sold early, who sensed that hysteria cannot last forever. They didn't just trade tulips, they traded human emotion. Because Tulip Mania wasn't really about flowers. It was about the first time in modern history when belief itself became an asset. And timing became the only difference between genius and ruin. The first great bubble had burst. But its spirit, the dream of turning the irrational into gold, would echo through every century that followed. The Pet Rock, 1970s. 300 years after tulips turned into treasure, a man in California proved that madness could still be profitable, even without beauty, rarity, or value. His product? A rock. In 1975, Gary Dahl was sitting in a bar, listening to his friends complain about their pets. The noise, the mess, the constant care. Half joking, he said, "You know what would make a perfect pet? A rock." Everyone laughed. But Dahl didn't stop there. Within weeks, he turned the joke into a business. He bought smooth pebbles from a beach in Mexico, a few cents each, and placed them inside little cardboard boxes designed like pet carriers. Each one came with a witty instruction manual. Your pet rock will never bite, never get sick, and never die. It was absurd. It was genius. And it was perfectly timed. America, in the mid-1970s, was a mix of cynicism and comedy. Vietnam had ended, Watergate had shattered trust, and the culture was shifting toward irony and self-awareness. The pet rock wasn't just a product. It was a punchline everyone wanted to buy. In less than 6 months, Dahl sold over 1.5 million rocks. He became a millionaire by selling something everyone already owned. The brilliance wasn't in the object. It was in the story, in the way he turned nothing into something through humor, timing, and cultural insight. Gary Dahl didn't sell rocks. He sold the feeling of being part of the joke. And that's what every speculative craze does. It turns participation into identity. Like Tulip Mania, the pet rock was short-lived. Within a year, the fad was gone. But its legacy, the ability to monetize irony, to turn absurdity into value, laid the psychological foundation for modern-day internet culture. Because from that moment forward, one truth became undeniable. If enough people are laughing with you, they're also willing to pay you. Beanie Babies and meme stocks. By the 1990s, the madness had gone mainstream again. But this time, it wore a smile and had cute button eyes. They were small, soft, and cheap, just a few dollars each. But Beanie Babies became one of the most profitable speculative frenzies in modern history. It started with Ty Warner, a former toy salesman who had one brilliant idea: scarcity. He deliberately retired certain Beanie Babies, creating an illusion of rarity. Suddenly, collectors believed that missing one plush toy could mean missing a fortune. Price guides appeared. Magazines published values. A limited edition Princess Diana bear sold for thousands of dollars. People stood in lines outside toy stores. Parents traded dolls like investors trade stocks. For a brief moment in the late 1990s, these tiny animals were a global commodity. But like all manias, it was built on one fragile thing: belief. When eBay flooded with listings and supply broke the illusion of scarcity, prices collapsed. Millions of collectors realized they weren't investors. They were dreamers caught in a psychological loop. Still, the lesson of Beanie Babies never disappeared. It simply moved online. 2 decades later, the same emotional storm returned, this time through screens, memes, and trading apps. GameStop, AMC, Dogecoin. Stocks and coins that once looked meaningless suddenly became symbols of rebellion. The meme stock era was born. People weren't just buying shares. They were buying identity, community, and revenge. For years, Wall Street had been the playground of the elite. Now, millions of small investors joined forces through social media to flip the script. The price of GameStop rose more than 1,700% in a few weeks. Dogecoin, a cryptocurrency created as a joke, reached a market cap of over $80 billion. Logic screamed that it was ridiculous. But belief, amplified by memes, momentum, and the thrill of defiance, turned ridicule into profit. It was Beanie Babies for the digital age. A movement built not on fundamentals, but on faith in numbers, and the psychology of belonging. Because deep down, people don't invest in data. They invest in meaning. And when money becomes a form of self-expression, the line between trading and storytelling disappears entirely. The Bitcoin outcasts. When Bitcoin first appeared in 2009, it wasn't a revolution, it was a curiosity. A strange piece of code written by a nameless figure, Satoshi Nakamoto, promising something impossible, a form of money without banks, governments, or borders. The idea sounded ridiculous. Digital coins mined from computers? A currency backed by nothing but belief? To most people, it was a joke. To a few, it was the future. In the early years, you could buy thousands of bitcoins for the price of a coffee. Programmers traded them casually, like arcade tokens. Some mined them on old laptops just for fun. When one man famously spent 10,000 bitcoins to buy 2 pizzas, no one saw the irony. That those pizzas would one day be worth hundreds of millions of dollars. For the believers, Bitcoin wasn't just money. It was rebellion. A direct challenge to the entire financial order. They didn't trust banks. They didn't trust governments. They trusted math. While most of the world mocked, a quiet network of idealists built the foundations of a digital economy. Forums became trading posts, servers became vaults, and as the rest of the world printed more money, Bitcoin printed none. Then, slowly, disbelief turned into obsession. The same institutions that once dismissed it as a scam began to study it, then adopt it, then invest in it. By the time the world realized what was happening, the crazy ones, the hackers, the libertarians, the outsiders, had become millionaires. Some, billionaires. And yet, the pattern was the same as it had always been. Every great investment looks insane at first. Every radical idea is laughed at before it's copied. And every fortune starts with someone who was willing to be misunderstood. Bitcoin wasn't just a financial story. It was a psychological one, proof that value is never objective. It's belief, coded into software. Just as tulips and rocks and toys once carried value because people believed in their story, so too did a string of digital numbers. And for the first time, belief itself had become programmable. The lesson: why crazy works until it doesn't. Every generation thinks it's immune to madness. We look back at tulips, toys, and digital coins and tell ourselves we'd never fall for that. But that's the illusion, the comforting lie that keeps history repeating. Because the truth is, markets aren't made of logic. They're made of emotion, of hope, greed, envy, and fear. The same forces that built pyramids and empires now build bubbles and bankruptcies. Crazy investments work not because they make sense, but because they make people feel something. Excitement, belonging, superiority. That emotion becomes momentum, and momentum becomes money. Every boom begins with disbelief. Every crash begins with doubt. And between those two moments lies the narrow window where fortunes are made. The early believers, the ones mocked, ignored, dismissed, are rewarded not for their intelligence, but for their timing. They see the wave before it crests. They buy before belief becomes popular. They exit before reason returns. And that's the paradox of speculative success. You must believe just long enough to profit, but not long enough to drown. From tulips to Bitcoin, the pattern is identical. 1. Someone dares to see value where others see nonsense. 2. Others mock, then imitate. 3. Prices soar beyond reason. 4. Belief fractures. 5. The story collapses. But the early believers have already left with the gold. Every era has its lottery. Its miracle that seemed impossible until it wasn't. But behind each one is the same eternal truth. Human beings don't invest in numbers. They invest in stories. And the stronger the story, the richer the illusion. That's why the most dangerous phrase in finance isn't "this is stupid." It's "this time is different." Because it never is. The only thing that changes is the disguise. Modern parallel. The new age of absurd wealth. The 21st century has taken speculation to a level no one in history could have imagined. Not because people have changed, but because the stage has. The internet didn't just democratize opportunity. It democratized madness. Now every phone is a trading floor. Every meme is a market. Every dreamer can build an empire from their bedroom. NFTs, digital images that anyone can screenshot, sold for millions. Virtual land inside metaverse platforms was auctioned for more than real houses. And AI startups with no revenue, no product, and sometimes no plan, raised billions overnight. To the uninitiated, it looked like insanity. To the insiders, it felt like destiny. Once again, the pattern emerged. Belief first, logic later. The same old story, wearing new clothes. An artist sold a collage of digital images for $69 million. A cartoon ape collection became a global luxury brand. Speculative tokens with dog faces outperformed major corporations. But beneath the chaos, something deeper was happening. Technology had turned attention itself into a form of currency. The people who could capture it, through humor, rebellion, or vision, could turn it into wealth. The market was no longer about what you sold. It was about what you represented. In the old world, value was created by scarcity. In the new world, value is created by attention. And the more absurd the idea, the more attention it commands. That's why the modern era isn't just a financial shift. It is a psychological one. The irrational has become the strategy. Every viral project, every meme coin, every billion-dollar startup without a product, they're all reflections of the same truth. People don't chase logic. They chase belief dressed in novelty. We are living in the largest speculative experiment in human history, and just like every mania before it, it will end. But not before making a few people unimaginably rich. Because the future doesn't reward the cautious. It rewards those who bet early, believe loudly, and exit quietly. The thin line between madness and genius. Throughout history, the greatest fortunes have always begun the same way. As a joke, a gamble, or a dream no one took seriously. The first tulip traders were mocked. The pet rock was dismissed as stupidity. Bitcoin was called a scam. And yet, each one revealed the same uncomfortable truth. What we call madness is often just foresight waiting to be proven right. Genius doesn't announce itself with certainty. It hides inside absurdity, testing who has the courage to look past logic. Because in finance, as in life, timing is everything. The difference between the fool and the visionary isn't intelligence. It's patience, it's conviction, it's the ability to hold belief just long enough for the world to catch up. Every era leaves behind the same message, whispered through the wreckage of its bubbles and the glory of its winners. Fortune doesn't favor the wise. It favors the believers. So the next time you see a ridiculous idea, an investment that makes no sense, a product that seems laughable, don't just dismiss it. Ask yourself what story it's telling, and who's already listening. Because the line between madness and genius is drawn not by logic, but by time. And when the dust settles, history never remembers who laughed. It only remembers who was right. If this gave you a new lens on wealth and risk, hit subscribe. History doesn't just teach lessons. It reveals patterns. And those who learn them early never look crazy again.